Well, the Indian steel industry has bounced back of late. And in keeping with that theme, the stock under the microscope is Kalyani Steel. It seems the company is in a bit of a sweet spot. Now, the reason the stock comes under the microscope is that it has a clean balance sheet, it has a strong promoter entity, and also it has large exposure to the auto space. What stands out is the market capitalization is around 1,000 crores. And the company sits on a cash balance of roughly around 500 crores. That's what cushions them, particularly in terms of a downturn in the steel industry. Kalyani Steel, remember, is a manufacturer of forgings as well as engineering quality carbon and alloy steels. They use the blast furnace route and they're part of the $3 billion Kalyani Group. In FY18, the promoters, they showed the faith. They went ahead and they hiked stake by close to around 4%. The other large holder, as per the recently declared shareholding pattern, is DSP Small Cap Fund. They hold roughly around 5% stake in the company. Remember, the company manufactures various components for commercial vehicles, two-wheelers, diesels, tractors, and basically 80% of their revenues is dependent on the auto space. The remainder comes in from railways bearings as well as other industries. And nearly around 30 to around 40% of their revenues comes in from group companies. That includes Bharat Forge as well. Now, the company stands to benefit due to its high auto exposure. Why is that? Because contract prices have been revised by close to around 10% for the second half of this fiscal. Now, that bodes well for them. However, rising iron ore costs, that's something that will limit their gains. The company normally does margins of around 15 to around 20%, and it'll be interesting to see what kind of margin performance they can deliver for the remaining quarters of this fiscal. Remember, the company's average ROE and ROC is roughly around the 20% mark. Now, when the auto sector struggles, Kalyani Steel struggles because it has a high exposure to the space, and also they sit on a large cash pile. But the street has been unimpressed with their cash utilization strategy and also lack of clarity in terms of the expansion plans, though they sit on a sizable large land that they can use for their expansion plans. Now, drawing out plans in terms of the cash utilization and also what are their expansion plans, well, both those two would be the key factors that you should be tracking. Keep an eye on this one, Kalyani Steel, the stock under our microscope.